Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income stream. My name is Matt, and in today's video we're going to be talking about the trades I executed for August 12th. I'm going to talk about how I chose specific strike prices, some of the mentality that I was going in with while I was picking those strike prices, which ETFs I'm investing in. Then we're going to take a step back. We're going to take a look at the last 84 trading days, and you guys will be the judge. Is it successful or not? I'm a little bit biased because I'm running the trade, so I'm definitely going to say yes, but you guys will make that determination. And then lastly, I'm going to talk about the trades I plan on executing for tomorrow, August 13th. So let's get the ball rolling. The first thing I like to talk about on my portfolio and on my YouTube channel is my Robinhood account. This is more so one, sign of transparency, and two, like this is the sum of money I am using to then generate the daily income stream. Not everyone is going to have an account like this, but basically the principles are the same. The principles are the same with a bigger account versus smaller account. Like you have to invest into good investments, and then those investments you have to make smart, covered calls, and then, choosing the right strike prices for you, balance between premium and delta and appreciation. So there's kind of like a, thought process for everything when it comes to investing. But yeah, this is what I'm dealing with. Let's head over to my Excel spreadsheets and then let's start talking about the nitty gritty. All right, guys, now that we are at the Excel spreadsheet, I actually liked looking at the holistic overview versus the individual trades I made so that we can talk about big picture first, and then we'll dive into like the individual, micro data of what I did, strike prices, thought process. So let's get going there. So for August 12th, ripping the Band-Aid off, we made $821 of realized appreciation gain plus premium. So that was a very good day for me. And I will make this caveat. I'm probably left some money on the table because whenever I trade the first, 15 minutes whenever the bell opens. I just lock in my premium, and then I don't even look at my trading count the rest of the day until I come home, because I'm usually going for a higher premium versus appreciation. And it really just depends on your strategy. I'm liking that, whenever I choose my strike prices, I'm choosing like $1 or $2 away from where the current at the money is, as long as it's higher than my cost basis. So I definitely left money on the table, but I mean, the results don't lie, guys. I'm averaging, theoretically, if I were to do this over a 12-month period, 61%. There's nowhere else you can get 61%. So I'll dive in those numbers in a second. But yeah, for August 12th, realized $821. The account is at $178,204. So we hit an all-time high with the account. I have made about $27,260. So this is accounting for my appreciation gain plus the premium I received. So I combine those two numbers because end of the day, I'm going to have to pay taxes on that number. And then we are, since, adjusting my trading strategy from investing into high income ETFs to my own options trading from that point in April 11th, we're up 21.8%. So we are doing phenomenal right now. Definitely riding a little bit of a bull run, but I am never going to complain about that. Looking at the trade win percentage, we're at 97.62%. 82 winning days, 2 losing days. I recently added another losing day on August 4th because of some weird administrative, Robinhood error, because I had a 632 covered call and then market closed at the 631.17, but then it got assigned because the investor that was holding the long option that I was, selling the covered calls on, they exercised it and then I got assigned. I don't know if maybe the Robinhood guy was wrong, but yeah. Also, they said this when I was on the phone with them. Theoretically, whoever owns that long option could exercise it 30 minutes after the bell rang. But even at that point, the SPY was still under, 632. I think it was like 631.83. So theoretically, even 30 minutes after the bell closed, when there's like that window for like, some investors to trade, SPY wasn't even in the money at that point yet. So I don't know. We realized that gain. We learned our lesson. I'm definitely moving forward, never going to really choose a strike price below my cost basis. I was saying earlier in my videos that's something I would, debate on, but it's hard to tell because, I haven't really had a bear market to really play with, but the market was up, investor exercise their option. What are you going to do? Moving forward, the average premium that I'm making per day, so from every single day that I've traded so far, like 84 trading days, I'm averaging about $324 per day. And if we look at that as a weekly number, I'm making about $1,700. So that is pretty good. The average monthly premium, we're at $6,484. So we are, making about almost $6,500 a month trading 15 minutes in the morning. That's literally some people's W2 income that we're trading in 15 minutes. And I came up with an average yearly premium based off of my account's performance. The way I calculated this $88,595 is I took the weekly premium. These are numbers that I am actually making, multiplied by 52. So that comes up with an estimate. And that estimate is that $88,000. So for 2025, I'm not going to have a full year of trading. I think I'll have like 8-9 months-ish of trading. So I won't have a full year, but for 2026, we'll have the raw good numbers. So we will see how I perform in 2026. And then based off of what I was talking about earlier with this, average yearly premium estimate, that would be about a 61% return. And from most of my videos, I like to track the range of how this number, moves from day over day. And the lowest I've seen it thus far is about 49%. And then the highest I've seen is about 66%. And this weeks left section over here. So for 2025, we have about 20 weeks left in the year. And based off of my trading performance, if I were to make, like $1,700 per week, I could make about $34,000. But ideally, when I started running my own options trading, I wanted to, at a minimum, make about $1,000 a week. Some weeks I'm well past that $1,000 a week. I hit 2,000, I hit 4,000. And there's some weeks I might be $800. Or, you take a loss like last week and I ended up only making $174 for the whole week. It hurts, but at the end of the day, we learn from our mistakes. And if you never make the mistakes, you can't learn from them. And I will say this, I'm glad that stuff happened to me earlier with where my account size is. Because imagine, if I wanted to buy and hold and then, 10 years from now, 20 years from now, I want to actually start trading. And then I start trading with a bigger pool of money and then I haven't been bit by, some Robin Hood problem or some just like me making some bad decisions. I rather make those mistakes on a smaller account like this. Like this isn't really a smaller account, but I rather make the account, the errors now so that when it's, when I have more money, I'm a little bit more experienced and then I will be less likely to make that same type of error. Of course, human emotion plays a big role into investing. And if you don't believe that, then I don't know, not a good thing. But yeah, human emotion plays a big role. And I'm glad I made that mistake now versus, 10 years from now when the account might be, maybe in the millions, but definitely still in the hundreds of thousands. Cool. With that being said, moving forward, when I started this options trading, my account back on April 11th, about $86,000. And since then, I added a little bit of my own money to kind of beef up, potentially retiring sooner. But the initial goal was I would wanted to make about $29,000, almost $30,000. And in 2025, after what was it, almost 4 months of trading, I've almost hit that $29,740. So I think by the end of August, we should be able to hit that number. Maybe, by the end of next week, as long as things are going good and the market's going to be bullish. If it goes bearish, we won't hit it, but we'll probably hit it in September then. But yeah, we only have $2,400 to go, $2,500. We're right there. And then I'll wipe this goal off and then come up with a new goal for 2026. All right, moving on to the estimates of what potential returns could look like in the future. Of course, like I mentioned earlier, we are in a bull market and these numbers are going to fluctuate because the way I populate this information is completely based off of what my trading performance is looking like. At the end of 2025, I'm probably going to reset these numbers, sell lock these in a different portion of the spreadsheet. And then year over year, we're going to compare, hey, how is our trading performance been looking? But for right now, like whenever I finish a year, I'll sell lock it. And then the remaining years will be the estimates based off of my trading performance. So for 2025, I theoretically should make about $61,000 of income. So I've already made about $27,000. And then if we add in another $34,000 based off my account's performance, I should at the end of the day have about $61,000 of estimated income. High income earners, I'm going to pay a little bit in taxes. The way I plan on dealing with this tax situation is I don't know if I'll pull the money out of my account. I think I'll just set up, I'm just setting up some cash on the side from just my W2 income. So I wouldn't have to pull out money from my account because I hate pulling money from my Robinhood account if I don't have to. So ideally, I'm going to try to leave as much as possible, leave that money in here, but I'll just have to pay the tax burden with some of the cash I have on hand. We'll see. Maybe I'll do 50% cash and then 50% from the account. It's hard to say. We'll see how much taxes I will end up paying. But yeah, guys, end of 2025 is looking good. Like, to think that I would make $61,000 of appreciation or premium my first, my first little bit of trading, highly would doubt it. But I'm thinking, 2030 might be that good retirement time. And I hate using the word retirement. It's just, financial freedom to kind of figure out what you really want to do. And if I'm making about $430,000 of, appreciation premium gain, I think that would be a good enough number for, just working, 15 minutes a day, just running some options trading. I'm definitely going to take that opportunity. I'm not going to push it down. And then if I stop working at that point, my taxes might be a little bit lower. And it might be in a lower tax bracket for some of my money, but other portion of my money is still going to be high. But yeah, in 2030, I would pay about $150,000 in taxes if everything stayed status quo, and my account would be close to about $1 million. So that's actually quite exciting. But I will say this, guys, even by 2030, I only make, $10,000 more each year. By 2030, if I'm still making $100,000 a year, that's still a benefit, and that's a win in my book, because I'm still training. I'm still learning the fundamentals of trading this way. And the more you do something, the better you're going to get at it. So the more time I'm doing this, the better and better I'm going to get. Yeah, 2030 would be a great number. But at that point, I'm hopefully me and my fiance will start, deciding a family, probably have a few out by then. And then, of course, as like a good father, you're going to want to take care of them. So I'll probably still work, and I'll probably still keep trading, trying to get the best life for them. But by 2035 at the latest, maybe I can do something 2034, 2033. Yeah, 2035, if this is the reality of me making this kind of money, you better believe I'm not working anymore. And then we're trying to find some passion projects, focus on being a father or things like that, because I think that stuff is really important. And the account would be at, about $5.2 million. And like I said, guys, even after, 10 years of trading like this, the account is 1/5 that. It'd be only $1 million. I think that's still a win. That's better than what most people are doing. Yeah, and then let's just look at, the dream scenario. We keep working, we keep investing. I keep reinvesting every single dollar in Robinhood. I should make, let me just double check this number, $4.6 billion in appreciation and premium. That would be freaking wild. And then my account would be at like, 10.7 billion. I think that's a little unrealistic, but even if it's 1/10, 1/20th, 1/50th, that's still a win in my book. And guys, I will say this with a caveat. That's if I don't add a single dollar more into this account. Do you understand what I'm saying? Like, because right now, I'm trying to be more cash heavy, especially with, I got a wedding coming up, I got some bills I need to pay. So I'm definitely being a little bit more cash heavy, trying to set aside money in cash. But then once I get past, like, most of these bills are coming up, I'll have my truck paid off, wedding stuff. Once that period passes and then I start adding more money into this account, guys, I think these numbers are going to blow up. And maybe this percentage might not necessarily be 61%. Say it's 30%, but returning 30% a year, that's still a huge amount of money. So yeah, guys, that's kind of like the dream scenario, the vision. That's what I'm working towards. Every time I'm making a video, this is what I'm working towards. And I hope you guys have some sort of vision that is like this, because you have to have a direction in mind. Otherwise, you're going to be a rudderless ship making figure eights in the ocean. And that is never a good thing. You need to have a vision, you need to have a goal, and they need to execute on that goal. I'm a firm believer in that. So with all this talking and mumbo jumbo, let's move over to the weekly tracker and then move myself from the screen a little bit. Okie dokie, guys. So yeah, for the week of August 11th, we already hit that 4-digit club after, a subpar week last week. So that's the one thing I like about investing into good investments like, QQQ, SPY, is whenever the market rebounds, you rebound. And that rebound was so quick. I was down, $10,000. My account was at 175. Well, yeah, let me scroll over. Yeah, like last week, my account was at that $165,000 mark, and then now it shot back up to 178,000. That's how quick, like, investing changes. You could look at this, August 1st number and be like, man, this guy doesn't know what he's doing. But then as long as your fundamentals are right and then you're persistent and consistent, you're going to do just fine. But yeah, going back to the weekly tracker, already in that 4-digit club, we're at $1,149. I'm pretty stoked about that. For the month of August, we are not doing, too hot compared to other months. From the last couple of months, we were solid. I will say, back in May, we had an 8,000. June was 6,500. July was almost a $9,000 month. That was freaking wild. And then we definitely started a little bit slower in August. And I think at the end of this week, we'll only really have 2 trading weeks left. So maybe I might be able to tack on another $3,000. So that one bad week definitely impacted some of my growth. But end of the day, it's a learning move. You got to learn from those kind of mistakes. But yep, for August, we're at $1,332. And as we mentioned for the yearly tracker, we're at $27,260. So we are closing in on our first $30,000 gain ever. That's pretty exciting. Now let's head over to the other side of the spreadsheet and let's talk about the individual trades I executed. All right, guys, kicking this off, the trades I executed for August 12th, I ran 3 covered calls on the QQQ. As you guys have known, I've been struggling to get these shares assigned. Well, not really struggling, but this 575, QQQ shares I bought, the 300 I bought, they've kind of been, on the books for quite some time. Some days I had low premium because the cost basis was way higher than where the money was. Other days it was close, but never got assigned. And end of the day today, it was actually going to be assigned. So let's dive into that. So I bought these at the 575. I chose the 576 premium because, like I mentioned earlier, guys, when I trade in the morning, it's literally the first 15 minutes. All my trades are done, and I'm just waiting the rest of the day, waiting for the cash secured put to get assigned or the shares I own to get assigned away from me. And then, once I'm making this video, I start coming up with a strategy of what I plan on doing tomorrow. Like, am I going to buy hundreds of shares so that I can just get back in the market, start running covered calls? So we'll talk about that once we head to Robinhood. But the amount of premium I made for running the strike price at the 576 was about $109. The QQQ opened at the 575.19, so I was able to maximize a good amount of that premium, and then only made about $25 of appreciation per contract. So 3 contracts, $75, easy day. So per QQQ covered call I ran, I made about $134 for each of them. So that was a good sum of money. And then they were assigned away because the QQQ closed at the 580. So I will say this, the one downside of my strategy is I lost about $400 of appreciation because the difference between 576 strike price and the 580, that's about $400. So $4 of the strike price is 400 because you'd have 100 shares, 4 times 100, 400 makes sense. So theoretically, I lost the potential of gaining $1,600 in a single day. However, nobody knows how the market was going to trade. I think some of the inflation data came out today. That's why the market spiked a little bit. That data could have came out, and then for whatever reason, investors could have went the complete opposite direction. So for me, I just like locking in their premium first thing in the morning, and then because whatever happens is going to happen. So I chose about, the closest, strike price I could without losing money for my covered calls. I also had 100 shares of the SPY. So then I ran a covered call on the SPY. I bought these shares at the 636. And then I chose a strike price at the 639 because the SPY was trading at the 638. So I was a little bit greedy. So I wanted to choose a little bit more appreciation so I can lock in that premium. Pretty much that was at the money. And then if it were to get signed, I would get about $300 of appreciation. And what happened? SPY closed at the 642. So I got my shares assigned away. But I did make $107 of premium. And then also from the price I bought this in at the 636, I made $300 of appreciation. So for this one options trade, I made $407. And then, all of these got assigned away. But like I said, with my QQQ shares, since I did lock in my shares, selling my shares away at the 639, I lost the potential to make about $366. So, but like I said, I like just locking in the premium, locking in the appreciation when I see it, because next thing you know, market's going to go down and then the premium will be bad for like a week, kind of like what happened last weekend. So there's that. And then lastly, I never just like not using margin. So I ran one cash secured put on the SPY, and I was kind of conservative because the market was trading pretty high, was at the 638.17, and then the 636 call, or the 636 cash secured put only netted me about $12 a premium. But I will say, like, oh, the market was high. If it were to go down, that'd be another good price. And then I'd be able to then run another covered call on the SPY, and then I would have been able to make another like $107. So for me, I like kind of wheel and deal, a little bit of margin, but I tried to be safe on it. Like, say this cash secured put got assigned. If I were to have these 500 shares at that point, I'm not running any more cash secured puts because I don't want to over leverage myself on margin. So there is a little bit of like checks and balances I like to do. Because some people in my comment section, they definitely mentioned like be careful with margin. I will say I 100% agree, but at the same time, like, yeah, to make some money, you do have to risk something a little bit. And I will say this: the worst thing that happens if there's like a market correction, kind of like what happened in April again, or even worse, like say like 2022, like COVID timeframe, whatever you want to call it. The worst thing you do is hold it, right? As long as you have a W-2 income and you can pay some of that margin interest, which isn't too expensive, everything is fine, right? But it's when that's what there's risk involved, right? Say you have that margin and then all of a sudden you get laid off from work and then things start kind of spiraling that way. So there is like that appeal, and that could be a potential problem. But I will say, wheeling and dealing a little bit of margin with this kind of a strong market right now, I don't necessarily think it's a bad thing, but definitely got to keep your ear to the ground to make sure that, if there's signs of like trouble, then maybe we kind of slow down on it. So that's just food for thought. But yeah, end of the trading day, guys, bagged in $821, and I hope to see that you guys are doing the same thing. All right, so now let's head over to Robinhood and let's start talking about what I plan on doing for tomorrow. All right, guys, now that we are back at Robinhood, let's take a look at what I'm dealing with. So I forgot to mention I had 100 shares of QQQ that I kind of wanted to leave alone just so I can see how the market was going to fluctuate. Sure, I could have ran some covered call to generate premium, which is exactly what I'm here to do, but I didn't do that. I don't know why. I had a suspicion the market was going to go up, but luckily that paid off. And those 100 shares that were assigned from a cash secured put like a couple of days ago is paying dividends. So tomorrow I'm probably just going to run, at the money covered call at this 580, probably the 581. Let's look at my buying power. And so I'm dealing with about $546,000 of buying power, and I have about $120,000 of cash available. So ideally, I probably right off the rip, I'm just going to buy, 200 more shares of the QQQ so that I can run 3 contracts on just pure cash. And then the next thing I'm going to do is I'm going to run 2 cash secured puts, one probably on the QQQ, one on the SPY, and so that we can wheel and deal like that. And so the way that Robinhood allows you to run cash secured puts outside of your cash, right? So like once my cash gets tapped out, then you have to enable this in your Robinhood settings for event contracts and futures. So once you enable this setting in your Robinhood account, then it allows you, I'm pretty sure it's like a $1 for your cash, but for whatever reason, I like looked on ChatGPT and kind of on some forums that if your account is bigger or more than $125,000, you kind of have a premium account. So you're going to get a little bit more buying power, and then you're going to get a little bit more event contracts money. So it's food for thought. So, look forward to that and start stacking that cash and start making that money. So tomorrow I would be able to run 2 cash secured puts with about $163,000. So that's awesome. Cool. All right. With that being said, let's take a look at what we're dealing with. So for this QQQ, let's head over to trade QQQ options. I may be a hypocrite because I say never do buy call. And then last week, what did I do? I did buy calls, but I think this circumstance is a little bit different. There was just a random, dip in the market, which I definitely thought was just like hedge fund driven. And I was fairly confident that the market was going to recover. So then when the market took that dip, I just did a 2-year leap. 2-year leap's basically just buying a call that's 2 years away from whatever the at the money is. And then I just made like $200-300 from it. Ideally, first, because since I've been doing this covered call stuff, it's relatively easy for me to like, okay, choose a strike price. I'm very familiar with how it works. Now I'm kind of like expanding, like, hey, could I squeeze out a little bit more money? One, I could lead to like me losing money because I'm being too greedy. But at the same time, I'm always willing to optimize my trading setup. But for the safe stuff, for any of the new investors, you really don't need to be doing anything too crazy. And I will say, you guys saw some of the estimate numbers, 49 to about 66%. Those numbers are phenomenal. Like, you really don't need to be hitting those kind of home runs. What I tell some of my friends at work is like, what I'm trying to do is I'm not looking for like that home run grand slam. This one trade is going to change my life, because that brings on a ton of risk with it. Because those types of trades, if they're that kind of like home run hit, there could be you lose all of that money. But like what I explained to my friends here is like, we're trying to be a little bit of a bottom feeder, where like the hedge funds are doing whatever they're doing, and then we're just trying to skate by, nibbling on a little bit of food here and there that, the big hedge funds don't really notice. And then it'll be enough for us, but for them, it's like small chump change, doesn't mean anything. So we're just trying to like get in between the cracks. All right, down to business. QQQ trading at the 580.63. I'm probably just going to rip a 581, covered call immediately when the market opens. I hate to say this, I maybe say this too much. I'm a broken record. I feel like the market might be high. There might be some pullback when the market does open tomorrow. Ideally, I would like to get in a better buy-in price to buy the covered calls, so the 200 shares. But at the end of the day, a year from now, this 580 is going to be a 52-week low, as long as the markets keep going up. So that's kind of the way I look at it. And I might just end up just buying 200 shares. So I would buy at the 580.63 if it stays there, and then maybe just run 2 more. So then, yeah, I probably would bag almost $300 of premium just from running those 3 covered calls. And then let's take a look at the cash secured put side of things. Cash secured put side, I'm willing to take a little bit less premium for a less likelihood of the option executing. So how we do that is we look at the delta. This is showing a 0.38 delta. So there's a 38% chance that this option is going to execute tomorrow at this 579. So I think that's still a little bit too high. I'm maybe looking for like a 0.2 or 0.3. Oh, 0.3 exactly. That would be perfect. Lock in nice $76. So I'll probably run 1 cash secured put for the QQQ at this 578. But let's, doesn't hurt looking to see what else is out there. If I really don't want more shares, I think I could also do $55 for 0.228, so like 22%. We'll see. This is just kind of like, throwing ideas out there. When the market opens, it might do something completely different. Some of these premiums might be cut in half. Some of them might be doubled up. So who knows what the market will look like when the bell opens, or when the market opens. But let's take a look at SPY and, just see what's out there, SPY, do some trade SPY options, sell call. We are at this 642. Let's see. Oh, 0.70. That is way too high. What the heck? Why are these premium? Oh, whoops. Duh, I got to look at cash secured put, not covered calls. I was like, this is too good to be true. All right. So for a strike price, that's kind of like, $2 away with a delta of 0.31, make about $71 a premium. That's looking pretty good. I definitely like that 70 number, that delta of 0.31, like that percentage. Let's see what this 640, that's 641. Yeah, let's see what this 640 looks like. $51, about 0.23. Yeah, so really it's going to be a debate between this 641 strike price and this 641. I'm usually I'm a slave to the premium. So I saw somebody write that in the comments. I just cheesed out. But yeah, I think I'm probably going to go with the higher premium because I'm a slave to the premium. So probably the 641 would be a good number. Yeah, guys, that's kind of a basic idea of what I plan on doing for tomorrow. I choose stuff that's about, $1 to $2 away from the current at the money. So that's when I've noticed a good touch point of like the best amount of premium. And I will say you do have to wheel and deal options a little bit. Like, you're going to get more shares assigned. You're going to get shares taken away. Is it very tax advantage? That's going to be very debatable. But right now I'm not worried about taxes. I'm just trying to learn the right way to run these options. And I think, yeah, just making the money is the best way. Yeah, guys, that wraps up the video. Hopefully you guys enjoyed it. Hopefully you learned something new. Hopefully you got a different perspective on how I trade. Maybe you guys can apply that to your specific trading strategy. So let's stay locked in. Let's stay harvesting. Matt out and see you in the next video.